Good evening, Trade Flare family. Welcome to the weekly watch list where we break down what happened last week in the stock market as well as give you an idea of what we're looking at into tomorrow. Now, before we head over to conduct a technical analysis of the SPY and 5 stocks, let's look at some key points to get a broader view of where we stand. So, as we head into the week, volatility ahead. The last week of July, we have the FOMC, big tech earnings, as well as more economic data like home prices, home sales, and more jobs data. Now, with what we've been seeing in the market for the past 5 months, pullbacks have been treated as buying opportunities, being quickly bought up and brought higher. And last week was no different. We saw another 3% pullback on Monday, and then buyers took the market higher throughout the rest of the week. Now, we did see all indices go higher, including the IWM, but a lot of investors are talking about how breadth is starting to become a problem here. The major moves that we have been seeing in these indices have been controlled by the moves in the big cap stocks that have heavy weight, like the FANG stocks, Facebook, Apple, Netflix, Google, and these moves have been contributed to the fact that we have seen solid earnings growth. For example, we saw Snapchat post great earnings, and then Facebook ran more on that note because they report this week. So those big techs really have a lot of pull right now on the S&P and the Nasdaq. And as you can see here graphically, breadth is failing as larger cap stocks are what's moving the market. This could be a concern, and this could point to volatility. Now, we may have some potential correction catalysts waiting for us in the upcoming few months, those being monetary policy, the increased spread of Delta variant, and now worries that we have peaked economically. But we cannot just flip into a bear market attitude while our GDP and our corporate profits are still poised to grow ahead into 2022. And as we saw last week, earnings growth can be a powerful driver of market performance. Even with all of the uncertainty, these big caps have been on a tear, and it's for a good reason. With that being said, I expect temporary volatility as we head into August and September, which have been historically volatile and historically down. So we'll keep this in mind as we head into the upcoming few months. If we do see some aggressive moves to the downside like we saw last Monday, that doesn't necessarily mean we're the bull market's giving up, we're fading into a bear market, but rather we're experiencing some temporary volatility, and we could start to see those cyclical stocks and those small cap stocks start to perform again. So definitely something to keep in mind as we head into the rest of the week. We've got FOMC, we've got some economic data, we've got big tech earnings, and the end of July heading into August, so it should be interesting. So headed into our next key point, we're going to be doing some analysis on the bonds, and we're going to be doing an analysis on TLT, and this is going to track the price of the 20-year Treasury bonds. So when you look at bonds, the price is going to inverse the yield or the interest rate. So why does this matter? Well, during times right now when our economy is in an interesting spot, and so is the Federal Reserve, we want to watch bonds and see what they're really pointing towards and what they're telling us. And right now, we saw some volatility last week. We saw this flight to safety in bonds. Now, what do I mean by flight to safety in bonds? The reason people think of bonds as a safe haven asset is because they have the least risk out of any open market securities. And this is because a bondholder has a senior claim on the company's collateral if it does go through financial trouble, if it does go out of business. Say a company goes out of business, the bondholder has a senior claim on the company's assets to get paid back for the debt. Now, Treasury bonds offer a whole new degree of safety because they are backed by the full taxing authority of the United States government. So think of a rush into bonds as a rush into safety or even a signal of economic slowdown. On the other hand, notice before this flight to safety that we started to see here a few weeks ago, the bonds were selling off because inflation was causing everyone to worry about the economy overheating. Now, if the economy was actually overheating, the Federal Reserve would start tapering the bonds quickly, thus increasing interest rates and calming inflation. And before we started to hear about peak economic growth, everybody was focused on the fact that rates needed to go higher to calm inflation, to tame inflation. But as rates went lower and lower, as inflation went higher and higher, this was just a kind of a shit show. Everybody has been trying to figure out what's going on with bonds. Where are they going next? What are they pointing towards? Is it a global economic slowdown? Is it an overheating economy? This mixed bag of ideas has caused this volatility, bond volatility often cause stock market volatility. So as we sit heading into the FOMC on Wednesday, big tech this week, a lot of economic data, these bonds are going to play an important role in telling us what's going on in the minds of the biggest investors in the world. At this point, as we stand, bonds haven't signaled towards the move lower or the move higher yet. So looking at TLT here, if we start to break below this support trend line, if we completely break below this hammer candle, that's going to start to point towards the move lower, which means that rates are going higher, and that's going to be focusing on inflation. But if we start to go higher again, if we get this bounce off of this support trend line here and we take out $150, that's going to point towards rates going lower and lower. And honestly, both of these scenarios are going to cause volatility, but it's going to cause different sorts of volatility. So different sectors will win when rates are going up, and different sectors will win when rates are going down. For example, the utility sector has been going up when TLT goes up. So if TLT starts to go up and utility starts to go up, that's pointing towards another flight to safety. Now, if we start to break down, if we start to break through the support trend line, that honestly gives me the idea that investors are in taper mode. They're thinking about the Fed tapering bonds. They're getting prepared for rates to go higher, for prices of bonds to go lower. And in that case, we could have a play set up here on TLT to the downside. That means we would be playing the probability of rates going higher. So we will be talking more bonds as we head into this week and the rest of the month. This is going to play a lot into the volatility that comes into August and September. Next, let's head over to our last key point, which is, as always, our indices and our sectors. As far as our indices went, everything was green. The SPY and the NASDAQ led. The Dow was right behind, but it still closed pretty strong. IWM also closed positive after seeing some volatility early in the day. So looking at our sectors here, communications led the way. Consumer staples and utilities were really strong with healthcare. So notice the three we just mentioned have the least year-on-year change. They're also value industries. They kind of go with the flight to safety and the continuous buying of the Treasury bonds. On the downside, we had energy, financials, industrials, and materials. So TLT goes up and the reflation trade doesn't really like that. If TLT goes down, then the reflation trade starts pumping. So watch out for that relationship. When TLT is selling off, if TLT is going down, then we want to look at that energy sector, that financial sector, and that industrial sector. I like that we've seen strong earnings growth in that industrial sector. So now that we have a broader idea of what's going on, let's go over to conduct a technical analysis of the SPY ETF, which tracks the S&P 500 index. So looking at the weekly here, we gapped down early in the week. So on Monday was really bad. We went lower and then we found support around this support trend line on the weekly, and then we ended up going higher, closing for an all-time high. So now moving into the daily here, I want to take notice the fact that we bounced right off of our 50-day SMA, a textbook bounce, but then this dip was aggressively bought back up as investors were focusing on earnings growth into the end of the week, and then we closed right around that 440 level that we had been talking about. As far as how this move looks, this reminds me of the move that we got back in late March, early February. So we had 3 touches to the 50-day moving average, and then this thing started to take off. And as this daily candle sits heading into big tech earnings this week, we could go a lot higher. It's all going to depend on what's going on with those bonds and what the market is expecting during the FOMC meeting that's going to be on Wednesday. So if we do go lower on Thursday, I do expect support around that 437.50 level. If we get that pullback, find support, look for reversal patterns to possibly go long on that note. If we do go below 437.54, I do expect a little flush down to around 434.64, which is going to be the top of that range that we were talking about last week. And notice that that 440 level is that doubling of that range. If we do break above 440, that's going to be blue skies territory, looking at $1.50. If we do end up failing back below like 433.66-ish, look for the targeting of the bottom of the range, because this would be, again, a fail back into the range. But of course, we're also looking at the half back of that range at 432.50 as well. If we do see aggressive sell-off into the range, look to target 430.38. But as it stands, nothing extremely bearish about the S&P right now. If there's anything that will cause the tech sector to kind of cool off this week at bad earnings, something like that, that's when we start to see pullback from here. If we start to see sellers tomorrow, that's gonna look like a bearish divergence on the MACD and also on the RSI. So this is gonna be telling us suggest that buyers tried to take it higher, but they ran out of strength. So that could be a pretty bearish sign heading into August, which is a historically volatile month, and there is a mix of potential correction catalysts. So this is something to keep in mind if we do see selling into Monday. So now that we have a broader idea of where we sit, let's dive into our watch list, starting off with CVS. And I like CVS because it trades like a healthcare stock, but it also trades like a consumer staple. And as you can see here, we're showing price acceptance above this recent resistance trend line that we've broken out of, with decent volume kind of increasing here. If I zoom out to the weekly, it looks even better. That candle has a long wick. It's poking out, breaking through that resistance trend line. It's got solid volume. We've got earnings coming up. We've got a strong healthcare sector. We've got a strong consumer staples sector right now. And one thing to point out is that this is kind of a bull flag. If you think about it, it's a continuation. It's pulling back to its 50% retracement mark. It's breaking out here. If we take out this 50-day SMA, then we're headed to test $86 before going higher. Before I move on, I want to pull this thing out to the monthly to show you guys how nice this hammer candle on the monthly is looking. If you retrace this most recent move on the monthly, we've retraced 50%, placed a beautiful hammer candle on the monthly, and now it looks like we could go higher. And I do like, and I think that this rotation could favor CVS and stocks like it. We saw a lot of people buying calls on Friday, so I'm looking to take a swing trade here. I like CVS, especially heading into earnings. So looking at CVS, looking to take that 84.50 break all the way up to 86 and higher. So next up on the watch list is Mastercard, and we always talk about how balance creates excess. So balance creates excess buyers and excess sellers, and in this case, it looks like we've created some excess buyers. So these creditors have been hyped up as the recovery has been booming, and especially with consumer spending being this week and consumer confidence as well, this could give us an idea as we head into Mastercard and Visa earnings. Looking at Mastercard, it's in a great place to move. Comparing Visa, which is completely extended from its 200-day moving average, but Mastercard has been stuck in a consolidation range here. So if we do break out, we have that balance, that excess that has been built up. We saw what happened to Adobe. We saw what happened to Oracle. We saw what happened to Moderna. Balance creates excess, and when it takes a longer amount of time for a balance to play out, then the excess is going to be a lot larger. So definitely something to keep in mind as we're trading Mastercard here. So as we go into Monday, we're looking to take the break above Friday's highs to fill all the way up to these highs over here. The closing high at 395.60. If we take out that level, then we should see all-time highs at 401.50. And then if we break above that, we're looking at the doubling of the range at 424. So $424 is a decent range here. So watch out for any sort of earnings beat. I like this as an earnings play. If we can get some sort of run up to earnings on Thursday, make a play free and hold it through earnings, that would be ideal. If Mastercard gets a huge beat on earnings, I do expect a huge breakout. So keep this in mind as we head into the upcoming week. Visa reports on Tuesday, Mastercard reports on Thursday. So keep that in mind. Visa will probably cause Mastercard to move. Next up on the watch list is Next Era, and we're bringing this one back after we saw a little bit of a sell-off. We're still holding above that 200-day moving average that we broke above. We've got that long wick, a green continuation candle. It looks really nice as it stands right here, but we have to see that move into utilities. We have to see that move into cyclicals. If we see bond prices go higher, then we expect to see utilities do really well. We expect to see the XLP do really well. This is the heaviest weighted utilities company, so that's something to keep in mind. So what we're looking for is the break of Friday's highs to then trade all the way up to 78.50. From there, we're really looking for the break to $81. With this thing, it's not going to be that quick. It's a slow mover. It's a utility sector. It's a value play. So keep that in mind as you're trading this thing. Closer to the money plays are more attractive on these stocks that don't tend to move as much. Next up on the watch list is Qualcomm, and Qualcomm is primed to run. I like this thing a lot right now. This thing's got earnings Tuesday, and like we said on Mastercard, we're looking to try and make a contract free and hold it into earnings as a free earnings play. So we're probably going to be trading the weeklies or the short terms on this one. We're looking to make a cheap bet, make 100% and hold it through their earnings call on Tuesday. If we do go higher, especially through an earnings beat this week, we're looking at that 150.38 level. If we start to fill into that gap, it could get really aggressively quick all the way up to 160 $162.34. So definitely something to keep in mind as we head into this week. Keeping my eye on Qualcomm. I really like this company. I'm a long-term investor and I will keep continuing to trade this thing as well. Last up on the watch list is going to be Coinbase here, and this is because crypto has ran into the weekend. Bitcoin is soaring and we're back up to that $35,000 level, and that's why we're going to be watching Mara, Riot, Coinbase, all of these crypto stocks. And if crypto starts to get that run again, then we start to get that inflationary play again. But overall, Coinbase would be a beneficiary, so I want to keep my eye on this. If we do end up taking out this 50-day moving average here, this blue line, then we could be looking at a trend reversal, and that's the point where I'd be looking to potentially take on any new longs. So definitely looking for some energy in Coinbase as we head into Monday, especially as crypto is rallying. And that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, make sure you hit that like button and don't forget to subscribe so you don't miss out on any live or educational content. If you're looking to be a part of our premier guided community, check out the link in the description to join our Discord. If you're looking to upgrade to TradeFlare Pro, get half off your first free month using discount code TFPRO2021. Now, don't be mistaken, we are not financial professionals and nor do we claim to be. The stock market is risky and you could lose money, so use all of the information inside these videos and our Discord at your sole discretion. And as always, do not forget that time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.